Hello, everyone. Welcome. Good evening, good afternoon, good morning, depending on where you are connecting from. My name is Sandra Uko. I'm a Maxwell Leadership Certified Team Member Coach, Trainer, and Speaker, and a member of the Toastmaster, a best-selling author, and an IT expert, salesperson for over 20 years. And today we have a special guest. Her name is Lola Owokoniran. She'll be the one bringing us, taking us into a deeper dive financial literacy today. And today's show is the Money Matter Live. And we have a special guest who will be taking us on 7 tips on how to plan financially. And today, before I bring her on board, I'd like to say what the show really is all about. It is about us coming together, get financial literate, find out how we can save better, save businesses we can do, investment vehicles that we can use in this time in order to make money and multiply our money, if life insurance, health insurance, and businesses we can do in this 21st century. What are the things we can do? What are the obstacles that we have? And how do we mitigate, overcome these obstacles? So today we have a special guest who has been into financial literacy for so many years. She will be taking us around and taking us on tips on how we can, better plan financially so that we can leave wealth to our generation. Said a good person, a good man leaves an inheritance for his children. And that's what we want to be. So before I bring her on board, I'd like to bring up about. So welcome. So Lola Owokoniran is a speaker. She resides in Atlanta, Georgia. She's married with kids, and she's currently serving as a ministry leader at All Church Nations Church, Carries House, under the leadership of Dr. Frank and Pastor Mary Ofosu Apai. She is the CEO and founder of Imini Wealth Group LLC, where our mission is to provide financial education, personalized financial planning, services to individuals, families, and businesses. And she empowers individuals to take control of their financial lives through educational programs, workshop, and one-on-one consultation. She has a non-for-profit sector, which is called the Financial Independence Tribe, FITS, where she focuses on teaching personal finance to young adults from middle school to college. And today we have no other person but Lola herself in with us, who will be taking us into a deeper dive on tips on how we can plan better. Hello, Madam Lola. Great to have you tonight.
Same here, Miss Sandra. How are you?
Very good.
Thanks for having me on your show, on your Money Matters show today. It's gonna be an awesome time.
Yes. I'm excited. Tips on how we can plan financially and how we can,
Yes.
better plan. The things going on all around the globe, everyone is complaining. There's
Hmm.
inflation everywhere, things are doubling, prices of things are going up, and
Yeah.
our salaries have not changed. The money we bring in has not yet changed. So, how do we mitigate? How do we have more than enough? And how do we even save? I have a lot of people say, the money is not even enough to take care of my family, let alone saving. Now, we would like to hear from you as you plan to take us into a deeper dive. We are so excited. Please relax, get a water, and relax to work. Join us on this show. And if you're just joining, welcome. We have a special guest. Her name is Lola Owokoniran. She'll be taking us into a deeper dive on financial planning. So relax and enjoy the show with us. Thank you. Lola, over to you.
Thank you, Miss Sandra. I'd love to thank everyone for joining us. This wonderful, Georgia weather is it's cool, it's calm, it's raining.
Yeah, it's just changing.
Yes, it is changing every day. You start up cold and then it warms up and then the unexpected. But that's the power of God right there, proving
Sure.
himself, the controller, the maker of the universe,
You
our
know,
king. But I love to also, welcome everyone and thank God for today, most importantly. Now today's topic talking about 7 planning tips that everyone should follow. in the year 2023. It's very important. You know, there's nobody that can care for your financial well-being other than yourself. You own yourself. You have to plan for yourself. Um,
Lala, before I go on,
yes,
please,
ma'am.
is there any way you can get up and just seeing only your head? Just
Okay.
from your shoulder. Yes, so maybe you can come
Okay.
closer to the
Is
screen.
that good?
Oh, good. Awesome. Awesome.
Okay.
Sorry.
All right. That's fine. So like I was saying, so why financial planning? Why this topic today? It's a very good point to do a checkup where we spent 6 months in the year 2023. Everyone started off the year, well, most of us started off the year with goals, either financial goals, wellness goals, you know, physical, career goals. But the question here is, have you gone back to look at your goals? The goals you set from January, and where are you? And you want to strategize. If you drop the ball here and there, this is a good time to pick back that ball. If your goal was to save $1,000, if your goal was to lose 10 pounds, this is a good time for you to reevaluate your financial goals. What your yearly goals, your that you set for yourself beginning, you know, when we crossed over into the new year. How has that been for you? How has the year 2023 been for you for the first half of the year? This is a very good time to check the status of what you've attained and rebuild, reevaluate, re-strategize. You still have about 6 more months in the month of in the year of 2023 to get
True.
done. So, you know, everyone wants to achieve financial security, and we all love to be stable in our finances. But in order to achieve that success, we need a plan in place, a financial plan. One of the most effective ways to reach your financial goals is through planning, financial planning. You have to have a well-structured plan in place and take into account, you know, your income, your expenses, and we'll touch on that in a few tips that I have to share today. You know, what your financial obligations are. Beginning in January, your income as it changed, your expenses as it changed, reevaluate things. A popular saying by Winston Churchill, he said, whoever who fails to plan is planning to fail. You know, just like we have our wellness checkup for our doctor visits, you know, we take our cars for a tune-up. When we acquire a certain mileage on our cars, on our vehicle.
Yeah.
So how much more our money? You know, we work so hard. We go to work 9 to 5, 3 to 11. We even pull over time. We should take time back to also do a financial wellness check. You know, the only time most of us see our tax accountants or tax professionals is during tax season. It shouldn't be that way. It should be a very frequent thing. Once a year, twice a year, um, every quarter, check on your numbers, see what the numbers are looking like, see where you need to cut back. Now, a few tips, I'll try to summarize everything in 7 main points. The first one is reviewing your budget. Like I said earlier, we make New Year resolutions. We make goals. When you made your goal for the year, did you set a budget? And if you did set a budget, which is very critical in the financial plan, when you have a well structured plan, you need to have a budget in place. Assess your expenses, monitor your expenses. As your expenses increased for the year so far, or as it reduced? Did you get in terms of your income increase? And if your income increased, is it offsetting your expenses? Do you have more expenses than your income or vice versa? You know, but when you list these things out, it gives you a true picture of what you have in your hand. Know how much you're taking home. That way you can plan and budget your week, budget your month, see where you're cutting back. What areas need improvement in your lifestyle? Are you eating out more? Yes, inflation has happened, but at the same time, some people did change jobs and have higher incomes now. So what have you done with the more money coming in? And if you don't have more money coming in, you didn't change your jobs, you didn't get a salary increase, go back to expenses. It's a good idea to call your utilities companies, negotiate. Some of them are able to offer you deals. Call your internet company. You have to shop around on these things. Call your bank. If they're charging you monthly fees on the bank you're using, it's time to change that bank account because there are other options out there. But when you itemize your expenses, you can get a better view to know where you should cut back. Thankfully today we have bank apps that help us categorize our expenses as they come in. That's a very good tool to always check in on that every month. And if you don't have the habit to check your bank account often, now is a good time to start, because every now and then they could sneak in payments that you were not aware of. That's how we have credit frauds, bank statements getting um, being vulnerable to this to those scams. So it's a good time to always check your bank statements, see what's going on your expenses. What areas of improvements do you need? Where do you need to cut back on? And then, if in terms of income, consider how you spend, what you're taking in. For instance, one of the very popular budgeting principles we have in the financial industry is what we call the 70-20-10 rule, whereby your main expenses should not be over 70% of your income. It's doable,
True.
but do we do it? That's another question. So every family, every home, every individual should put numbers to paper and see what the numbers are saying. 70% of your expenses truly should be what your living expenses should be based on. The 20% is what you need to allocate towards paying off your debt. And then 10% is towards paying yourself. Now, when you do the 70-20-10 rule, I am a Christian, so I believe in tithing and giving. This is after you've tithed and given your offering. Whatever what you have left, 70% of that is what you should leave within your mortgage, your utility bills. And if it's not cutting it, it might be time for you to start a business. Go back to school, improve on your skills, acquire more skills to get you to become more, um, what's that word? More indispensable in your industry, make you stand out in your field of specialty, So you have to keep developing yourself. You have to keep growing. If that income is not good for you, find other means to acquire more income. Get a part-time job, get a second job, start a business. You don't have to, there's so many business ideas out there. Do what suits your flexible, your time frame. The next point I have in terms of the financial tips for planning is savings. What do we do about our savings? This also falls under paying your future self, that 10%. Thankfully, we have bank accounts now that we can automatically make those payments deposited into our account. Automating your savings is a very smart way to save money consistently without even thinking about it. It doesn't have to be three figures number or zero or six figures. Start with as little as $25 a paycheck. You know, if you think about it, $25 a paycheck or $10, that is somebody's per hour pay. You can allocate the first hour of your pay if you're paid per hour, even if you're paid salary. Maybe a portion of your salary is going towards your savings, but start something today. Set up an automatic transfer from your checking to your savings account, or an investment account. Another way you can do this is, most importantly, you want to make sure, if possible, that account is not linked to your checking account, so you're not tempted to go pull in there, have this urge to maybe get a cup of ice cream, or things
I'll
that we
make withdrawal.
or make a withdrawal, to go buy that purse or shoes or go on a vacation, things that we don't need but we want. So we have to understand what's the goal of that savings account. That's the first thing. And I did forget to say, initially when I started, that everyone's financial journey is different. I need to point that out.
Yeah.
This is tips and tricks. Everyone is on different level when it comes to finances. My goal might be to, for instance, save $1,000 by the end of 2023. Another person's goal might be to save $500 or save for a new car, 3,000, 4,000. But everyone's financial journey, wherever where you are in life in terms of finance, is different. So don't compare apples to apples. These are just tips and tricks that you can apply, or sit with a professional to help you put the proper things in place. Now, saving is very important. And even the word of God buttresses that point in terms of savings. If you look at the book of Proverbs 21, it says that the wise man saves for the future and the foolish spends whatever they get.
Sure.
You Another analogy, I love the book of Proverbs. It's so insightful in so many ways. In the analogy that he explains about the ant. The ants are so little and they don't have that much strength. But the word of God instructs them to store, to save food for their food in the summer. Because in the winter time, when it's cold, when they can't go outside, when when the weather is not conducive for them, they have something to fall back on.
Sure.
What do we all have? So what do we have to fall back on today as an individual or as a family? What are your savings goals? Is your goal to save for college for your kids' college? Is your goal to save for groceries for when the next COVID hits? We saw a heavy impact in our society all over the world. It was a global impact there. But set a goal, set an amount, and make it a priority. When you have that automatic withdrawal from your bank account, or you set it up from your employer, if you have a job you go to, as we do the direct deposit through our employer, or even if you're a business owner, you can always set that up to make that money be deposited. You won't even feel it because it's already in place. We have apps that can help us reach our goals today. The banks have them. We have Digit, like Digit. That's another app. Capital with a Q, and so many more out there. So consider these apps. Most of them are free and they're out there for us to use. So savings is the provision for your future, for your tomorrow. The Joseph story, the story of Joseph is a good principle here as well. He in the 7 years that they had plenty. You know, they saved in order to survive the 7 years of famine. What do we have in place for these situations? And this also links into emergency funds, which is the next point, establishing an emergency fund. If you lose your job today, what does your family have to fall back on? Do you
True.
have any safety net in place? This is point number 3. Establish an emergency fund. It's an emergency fund is not, again, it's not a want or a need. It's for unannounced events that might happen, to cover the unexpected. What provision do you have in place for these financial emergencies? But start small. It's better for you to do something than nothing at all. Again, set up the auto transfers, set up the bank accounts. We have high yield savings accounts now that serve in terms of that offer you a high interest rate, as high as 5-6%. You can the what I always recommend is you disconnect it from your daily bank account that you use to pay your utilities, so you're not tempted there. But
Sure.
start something. And then, as this emergence, as the you want to also make sure that you spend it for emergencies, and as they come up, things like your car breaks down, things like your dishwasher breaks down. What do you have in place to fix that? Naturally, most of us, what do? We don't prepare for those things. We didn't prepare for COVID. Yeah, but it happened. A lot of people were out of jobs. A lot of people lost their homes during that crisis. But we need to be prepared for the next crisis. We need to be prepared for the next emergency that will come up. When we don't have those things in place, many of us fall on credit cards. Many of us fall on private loans. That's whereby we rack up those debts and liabilities over time, which is not a good habit. It's not a good financial habit. So build a good safety net in place. The golden rule for emergency funds is doing 3 to 6 months of your income. Um, if you can't do your income, do your expenses. 3 to 6 months of your expenses, your basic main expenses, things like a roof over your head. You need to pay your rent. You need to pay your mortgage.
Sure.
You need to feed. You need to, if you have kids like I do, they need to feed. You can't go buy, 1 square meal a day. They
It's
need.
not possible.
So these are necessities, but have something in place 3 to 6
And
months.
now they're on holidays, so there's more spending.
Yes, there's more spending. Yes, there is definitely more spending, more need. So then this is a time where you have to analyze needs versus wants, but have something in place to cover those expenses.
Sure.
With COVID lasting over a year. After you attain your 6 months, we also recommend don't stop at that. Build up on that. Do a year, do 2 years, but you have something saved up for in case of emergencies you know again, and as you spend this money, your car breaks down, you're out of a job, grow the money back. Don't just spend and then zip it. No, have the habit of refilling that fuel. Refill your tank. As you take out of it, make sure that money goes in there. you know and tip number 4 is planning for retirement.
Before you go to tip number 4, tip number
Okay.
3,
Mhm,
you're actually saying that perhaps there's an emergency and I'm done using my emergency fund. Can
mhm.
I go back to my savings?
So I it depends on the goal for your savings.
Because I heard you said when
Mhm.
you take from the savings, once you have more funds, you can return the funds back into the savings.
So it's two different things. Let me make sure I'm clear on that. So you have your savings for your savings goals, and then you have your emergency fund.
Sure.
Those are typically two different buckets. Everyone's savings goals are different, but everyone should have an emergency fund. As you deep into your emergency fund, your safety net savings, let me be specific there, and you spend from that money, make sure you grow that money back.
Okay.
Yes. Make sure you reimburse yourself because you're paying yourself, in other words, you know. And again, everyone's goals are different. It could be a short term goal for 3 to 6 months. That, okay, within 3 to 6 months, I want to reach this goal. I want to use this money for my vacation in next year,
Sure.
so not everyone has the luxury of getting some kind of inheritance or big chunk of money. But everyone should always plan these things,
Yeah.
So it's a good idea if you don't take vacations, set a plan. If one of your goals is to go on vacation every year, say next year summer in May, I want to have a accrued 3,000, 4,000, and then towards your vacation time. So those are two different buckets there. Yeah.
Okay.
But ultimately, you don't want those accounts to be linked to your everyday account because
Sure.
there
So that you don't have easy access to them.
yes. I do also want to say is another thing is that some people love the cash, liquid cash method, the envelope system. If that works for you, do it. Having an envelope or money bag. There's a lady on out of California. She developed this envelope system during pandemic, and she customizes it. She makes it all fancy, and she labels them. Literally, she gets her money deposited into her bank account, and she goes to the bank, withdraws the cash because she doesn't like the payment online and things like that. And she puts for gas money, for groceries, she has an envelope for each expense that she takes care of, and that works for her. And by just sharing her financial journey on Instagram, different requests came up. People also wanted that envelope system, so she made a business out of it. Now she's selling it on Amazon. She's making six figure. I mean, she's making 1 million. She made over 1 million last year in this business. So if you love the envelope system, that's also a good way to go. You can go on Amazon. There are different designs for envelopes that you can personalize them. Put the cash in there, and then put it in your safe deposit box if you have one at home, or just store them away in a secured place. But now don't be tempted. So so that's just the risk there, because don't be tempted. And because if you're tempted to go spend out of it, then when it's
Then
time
it's
for
not worth it. It defeats the
it's not
purpose.
worth it. When it's
The
time for
purpose
you
is
to
defeated.
enjoy the benefits of that goal that you set, you miss out of it. you know
True.
so if your goal is to set aside an emergency fund or on your savings for $1,000 or 3,000 by December 2023, and you look at your bank account on December 31st, and you see that three figures with a 000 in behind it, you're gonna be happy. You give yourself a pat on the back. One other way to cheer yourself up is you can reward yourself. If you when you set that goal, and okay, if your vacation time came up, for that, the vacation one sticks to me. In May, you reached your goal. If your goal was, okay, from today on I want to have 3,000, 4,000, to go on vacation in May, and you said that you want to have that money by January, because you have to book these things in advance, to get cheaper costs there.
Yes, to get some discounts cut off.
Yes. So you want to make sure that you find a way to reward yourself. Once you reach that goal, it could be, okay, on that vacation, I'm going to do some shopping while I'm out there. Reward yourself so that the next time you set a goal, and it's a very good tip to do for the kids, you know, when we acquire all those assets and we work hard and we leave that all, when we grow old and we leave that much money for them, which I hope is everyone's dream on this call, um, and you pass it on to them. If you don't start teaching them those tips, those habits today, they're gonna splurge on that. They won't know.
Yes, we're going to squander it.
Yes, they won't know how to handle that fund. So it's always important that we also transfer this knowledge, these financial habits, on to the next generation, the younger ones. Get a piggy bank for your 5 year olds, your 3 year, your as soon as they can start writing and reading, and aunties and uncles are giving them $1 here, $10 here, $5 here. Make it a rhyme. Piggy bank. They get home, they put it in there. Save, set them a goal. Okay, if you save $100 for the year, we get you, maybe they have a nice toy, a toy that they like to play with, or an activity they like to do. But
Yeah.
put a reward system in place for them to encourage them. So to challenge them to do more. Just like we do for them, we should do for ourselves too, you know. So point number 4. I'm okay to move on to point 4, right? Or
Yeah,
you
you're good.
okay. So point number 4 is planning for retirement planning. Many of us don't like to talk about this, but it gets here sooner than you can expect.
Sure.
Everyone is gonna go through this phase. Everyone is gonna go through this phase. Now, retirement is even like the new thing now. You can retire in style. Many people are not technically retiring; they're still working part time, and earning some of funds, but they do that. I Many people are doing that not because um they cannot afford, not because they can afford to live um outside of what they've saved up. They need to work to sustain themselves. And it's very unfortunate that many people tend to neglect retirement planning until it's too late, which has caused a lot of financial struggles amongst the seniors today. Thankfully, the government has also, the US government, let me be specific on that, they've also realized this, and they've come up with a term called long-term. Well, it's been in existence, but now state after state, the House of Rep, the U.S. government, the deliberators involved there, they are passing out a new legislature now, that everyone is required to have some form of long-term care um, for themselves. So just like how you go to work and they deduct from your paycheck social security, taxes, everyone is now going to be required to pay some form of money towards their long-term care, either through your employer will be deducting that from your paycheck, or you can get that from an outside vendor, an outside carrier, a life insurance company, an outside external carrier, but you have to have a plan, a long-term care plan in place. Why they've done this is because a lot of seniors that have needed that care, long-term care, having to go to nursing home, having to get some assisted living help in place, they cannot afford it.
True.
They can't afford it. And a lot of this responsibility has fallen on the kids, has fallen on family members to take care of them. So the government, the U.S. government, has really looked into this. They've actually approved it in Washington D.C. and I can't remember the next state, but it's going around state by state, and that is going to be implemented. So Georgians, get ready. If you don't have that yet, talk to a financial professional. There's so many ways you can add that on, but talking on retirement, it's a phase of life that comes with a reduced or no income. It does require preparation. You have to prepare for it. It doesn't it doesn't it comes unannounced, and when you talk about retirement, we can all decide to retire at different stages of life. It could be in
Sure.
your 50s, it could be in your 40s, it could be in your 60s or 70s. Some people like to work till they're 80, just to keep that mind active and get them engaged in a daily activity. But get things in place. Know what your retirement needs are, your basic needs. If possible, have your home paid off before you retire, so that
Can
would.
I ask a question?
Yes, ma'am.
When you talk about retirements,
Mhm.
are you talking about retirement from total work, no longer working, or retirement from paid employment to doing your business?
So retirement is a definition for is a different definition for everyone. It's a
True.
lifestyle that you can make it what you want it to be. Some people retire, they're business owners, but they still have a business, but they have people that run that business for them. And they go in part-time and they are there to monitor things. Some people do community work. They're retired, but they're still working for a library at Walmart. It's not like they can afford um, their daily expenses, but they're retired and they want to keep active. For some people, they love to travel the world. So they travel, do global, they go around helping the less privileged, do other things. Miss Sandra, are you there? Sorry.
Right there.
Okay. So
Yeah.
retirement, the definition of retirement is different for everyone. The age of retirement is also different for everyone. But most importantly, according to the US law, retirement age starts at typically 65, 67. If you're talking about Social Security, that's a whole different topic. So, but retirement typically starts at the age of 60, 67 for US citizens, for the age you want to leave the workforce actively, or you can leave partially. You can work part-time, knowing your limits, that you can work certain hours and still be getting a residual income. And some people cannot afford to retire. They cannot afford to retire, so they have to keep working until the inevitable death happens. So everyone is a different stage. Like I said earlier, finance is a journey. It's an individualistic journey. Everyone's story, everyone's picture is different. So, but ideally, you want to estimate your retirement needs, even if you're still working part time or full time, or not at all. You need to take into account what your expenses are, what you need to live by, your housing, your healthcare costs, which will typically increase during your later years, because Yes, ma'am. Okay. Because at that age, your medical cost is no longer on your employer. You assume your medical costs in terms of healthcare. So you want to make sure that you have something in place, know your needs for retirement, know how much you need to retire. Don't wait till you are approaching your age that you have set for yourself to retire before you start saving or contributing towards your retirement. The second, in terms of retirement, you want to start early, start saving early. The earlier you begin saving for retirement, the better. Don't
Sorry,
wait.
the weather changed. It's
Oh, okay.
raining. Everywhere became dark. There's a blackout.
Oh, okay. I was
So
wondering.
that's why.
Okay. All right. I see you now. You're good. All right. So I was talking about retirement, estimating how much you need for retire. Considering what expenses you need to cover, calculate it, put pen on paper to estimate how much you need to retire. Start early. And it's better to start saving than not at all. If you haven't started, start today. $100 a month, $200 a month, but start something. When we talk about retirement, we have what we call the three-legged stool, which comprises of your savings, your personal savings, your pension, if you have your pension in 401k, IRA, um, and then we have Social Security. In terms of savings, that could also be, your bank account. If you have a high yield savings account, that could be a cash value life insurance policy. You can use that to grow money towards your retirement. A lot of policies today also have all the benefits attached to it. Life insurance is not only when you die. you know, we need
True.
to overcome that stigma out there today. You can enjoy your policy when you are alive. It's not when you die. And
Yeah.
it's also a beautiful thing to pass on to the kids because it's
Yes.
tax advantage. So that's a very good tool to build wealth, to transfer to generation, from one generation to another. So,
Yeah.
but ultimately, start something. If you're undecided on what to do, talk to a professional, but don't
Mm.
stay behind the scenes, because if you keep quiet today, you're playing with your tomorrow. Your golden years are right around the corner. So it's never too late. It's never too late to start planning. You're in your 40s, you're in your 50s. It is not too late.
Yeah,
Um,
it's even said, it said the best time to have ever planted a tree was 20 years ago, and the next best time is now. So it's
yes.
not too late. Start
Mhm.
now,
Start
you
now.
know?
Yes. And as you have a plan, make sure you review your plan if you do
Yeah.
have a plan in
And that's
place.
why I tell people, I said, goals have gone beyond just being smart, but
Yes.
smarter. Smarter
Yes.
in the sense that your goals have been set. You
Hmm.
might need to go back to evaluate your goals and review them. That's the
Yes.
ER. That's why it's no longer just being smart, but smarter.
Yes.
Sometimes you have to review them. It's 6 months
Hmm.
down the line. You might want to go and evaluate your goals. Are
Yes.
they taking you to where you want to be?
Hmm.
And you might have to revise it.
Yes.
Some people must have met their goals. And
Hmm.
so you want to add one or two things more to keep you, motivated. So you
Yes.
have to go evaluate and revise your goal. And so
Yes.
before we go on to other session, or you continue, let me just take a water break so that we
Okay.
can get
Are
other
you thinking of how to
category.
publish your book on Amazon or how to get your published book to become an Amazon bestseller book? Dip Insight Books is the perfect in-between solution in transforming your ideas into a book. We can help you with all the complicated parts of publishing, such as process TO transformation. What we do: full manuscript evaluation, receive quality assurance edit, full copy edit and final proofread to remove spelling and grammar mistakes, oversee your cover design, create your interior layout, publish and distribute your book, lock down your marketing strategy. Ghostwriting, where there is no manuscript. Our goal is to help you publish your book promptly. Contact us today at 404-740-9091. Email us at info@dipinsightworld.com. To start the submission process, check us out at www.books.dipinsightworld.com and submit your details. You can visit our Facebook page at Dip Insight World.
Welcome back. Thank you.
Yes, ma'am. All right. Would you like me to go on?
Yeah, you can go on.
All right. So not to touch on to finish, continue on the retirement topic. You do need to review your retirement plan. It's always good to check on your portfolios, on your pension plans. Is it going where you want it to go? Check on your savings, but don't wait till it's too late to start making adjustments, and understand the tax implication on your retirement. Benjamin Franklin said something that nothing is certain in this world, except two things: death, we're all gonna die, and then
Sure.
and taxes. You know, and and thinking about that, when you make money, they tax you. When you spend money, they tax you. When you save, they tax you. Because you have to. There are also ways you can do without that, but they do tax you. Even when you die, they tax you. Yes, that is the law. That is the country we live in. From sales taxes when you're shopping, to property taxes, to income taxes, all kind of taxes. But we have to be smart about it. So how do you become smart? Talk to a professional. Don't wait till your tax return time, when it's time to file taxes, before you start um, getting recommendations from your tax accountant or your tax professional or your financial advisor. But talk to someone. It's a good time to check on things. And these laws, the principles, the guidelines change year after year. But if you wait till it's too late, it might be too late to make those adjustments. So make sure that if you're not knowledgeable in this topic in terms of retirement, talk to the experts. Don't be quiet, because you're the one that's going to suffer it at the end. Be at the disadvantage. So you want that
Sure.
financial stability. You want to put things in place for yourself and your loved ones. Um, I'm going to move on to tip number 5, if that's okay.
That's fine.
Right. So tip number 5, I did mention a little bit earlier, but it's about insurance. Evaluate your insurance coverage, your home, your auto insurance, your life insurance, those contracts, for the home, for the auto, the rental coverages. It's a very essential part in your planning. The US government, they require us to get, even, when you go buy a car, before you drive it off the lot, the
You must have car insurance.
car dealers make sure you have a car insurance,
Car
you
insurance.
know, an auto insurance. When you buy
Also, with the house insurance too. I just
when you buy a
experienced that.
property, yes,
You must
it's
have a
one of your
house insurance.
So one thing that bothers me is that if we're protecting these assets, why do we have a problem protecting our life? Shouldn't that
True.
matter
True.
most?
And the life should be even most important because it's
Yes,
the life that makes this money.
yes, especially if you're the breadwinner of your family, you know. But bringing that up as an essential tip is, you need to evaluate your contracts before the renewal date is up. Shop around with your auto insurance, with your home insurance. If you have a life insurance policy, it's a good time to check in, set a date on the calendar every year. Your financial advisor should be with your financial professional, to set a plan with them. For we at Immuni World Group, we always do an annual evaluation. We reach out to the client, and we set up a meeting. We do an annual review, see what has changed, what lifestyle has changed. Do we need to increase? Do we have a newborn baby? Are we married? What has changed in that person's lifestyle for us to tweak the coverages that policy has? If you've bought a new property, do we need to acquire? What's the value of that property today? Do we need to acquire more deductible or lesser? So when you're looking at your policies, you want to review all your insurance policies, because there are ways you can save money there. Determine any gaps in your coverage so you're not vulnerable. If you own a house or property, you want to consider, if you're in an environment or in a state that you're vulnerable to any natural disasters, a hurricane, you move or you relocate, make sure you have enough coverage on your properties and your life. You have dependents on that depend on you. You want to make sure that if anything were to happen to you, they're well taken care of.
Yeah,
You
they're
know,
well cared for.
yes, assess those changes as you your needs. Take stock of your inventory on these things. As those life changes happen, you buy a new car. You want to make sure that you get a policy on that. So these are changes that, in terms of insurance, you want to make sure that you have the right coverage to meet your needs. Shop around, get better rates for on those policies. When your contract is about to lapse, always shop around. Don't settle for renewal. Bundle them if possible, because when you bundle those policies, many of them give you a discount. But shop around to make sure you get the best deal. Examine your deductibles, examine your premiums, review your deductibles, your premiums. Make sure that it's in alignment with your budget and your financial objectives. If what they're offering you does not meet your goal in terms of money, then shop around, move on to the next one. But make sure that you are satisfied with what they offer you in terms of coverage and how much you're paying. If you're increasing your deductible, make sure you have that money saved up to cover your deductible when you need it, if the need arises. So that's very, very important there. Now, the next tip I have here is paying off your debt management. This is a very crucial step towards achieving financial stability and security. Debt is a significant burden on our finances. It restricts us in so many ways. Some of us, some people can't even sleep at night knowing that they owe money. So the longer you put aside your debts and you don't confront them, the higher, in most cases, your interest is accruing on those debts and fees. Credit cards, if you owe the IRS, if you owe hospital bills. But fortunately, with the right strategies in place, it is very possible to pay off these debts and become financially free. Did you have something to say, Miss Sandra? Sorry. You're mute. You're mute.
Oh, you're fine. You can go on, sis.
Okay. So when you talk about debt, paying off your debt, the first thing you want to do, like I said, confront it. Reach out to your debtors. Before you do that, you want to list them out and how much you owe. Take an inventory. List them out from your credit card to your loans, any outstanding debt you owe. List them out. Consider the interest rates and what the minimum required is. And start off with the highest interest rates, the debts that you have the highest interest rates on. Now, like I said earlier, this strategy might not be good for everyone. Another strategy is starting with the lowest balance. But when you sit with a financial advisor, a professional, when they see the numbers, they can help you set up a plan, set a goal to get that loan, that debt, that credit card paid off, to help you free up more money to enjoy life, to grow more, to invest more, to save more, to do other things, do a business. But if you have that debt still lingering on, you're literally pushing that debt. In some cases, even when you die, they go after the family members. They go after your estate if you don't have the proper estate planning in place. So it's very important that we start something. Don't shy away from your creditors. One of the people that you don't want to owe is the IRS. They do not joke. If you get a letter in the
That's
mail,
true.
if you get a letter in the mail and you're ignoring it, don't do that. If you don't have the money, reach out to them, set up a payment plan. $20, $50, but do not ignore that letter, because if you for I think it's for every when they give you a timeline, I can't remember the exact date. I think it's 3 months. After that, and they don't hear back from you, it accrues penalties and interest rates begins to accrue on that debt. So a debt of $5,000, by the time you're waiting, oh, I'll call them, I'll call them. When you call them back in 2 years, that money might have increased to $10,000. So you do not want to wait. They fine you and interest rate. That's how they make their money. So you want to call them, reach out to them, start something, even if it's $20, $25, but don't ignore it. Because if you think about it, you did spend that money indirectly, you know? So if you owe credit cards, assume the responsibility. And that's also what we call financial responsibility. And you don't want to leave that, you know, to your loved ones to take care of when you're no longer here. Because some of those creditors do go after your estates or the family members. So you also want to consider consolidating your debts. If it's so overwhelming, you can consolidate them and they can, you know, negotiate with you to come up with a lower interest rate, set up a monthly plan, a monthly payment for you to pay off that debt, to simplify things for you so that you can have flexibility to allocate money in other areas of your finances. So but reach out to the creditors and negotiate and come up with a plan. And then in other ways you can also, you know, consider towards paying off your debt is cutting back on your expenses, you know, free up extra cash. Sometimes you might have to get a part-time job and let that paycheck go towards paying off those creditors. You know, avoid unnecessary spending. Negotiate your bills. You can call your gas company, you can call your utility, your electric companies, and negotiate these things. You can call AT&T, your internet, shop around. Every time your bills are about to be renewed, you know, the internet, that's one thing that you have to renew every day, every so often. The insurance plans, negotiate on those bills, find extra ways to generate more income or free up your expenses. Utilize windfalls to pay off your debts. What do I mean by that? Things like, for instance, if you win the lottery, pay off your debt. If you get when you get your tax refund, many of us use that money for other things, vacations, shopping. As according to statistics, those are the two highest places we
Yes,
put.
and you can use it to pay off your debts.
You should use it to pay off your debts. Yes. You get bonuses on the job. You work extra. They give you extra money on the job. You know, use that money to pay off your debt. Any inheritance money passed down to you, use it to pay off your debt. Pay down your debt rather than spending it. It's very important. Create a debt repayment plan. Create a debt repayment plan. Set a goal. Strategize it. If you're starting in July 1st, your July is your first payment. Set a goal. You know how much you owe. By next year, July, I want this paid off. You know, but set a goal in amount, reach out to them, negotiate. You can never, the worst they can tell you is no, but at least you tried. You tried your very best, negotiate on your bills to reduce your expenses, to free up money to pay off your debt. Also, call those creditors, negotiate on your debt, come up with a payment plan, have them. Sometimes when you negotiate, they can even take off the late fees. You know, for many of us, sometimes we get what is that word? When you overspend on your checking account, overdraft. Yes, they charge you overdraft fee. Don't sit down and let that slide. Call them and negotiate. Sometimes they will take it off. They'll refund you back your money. On your credit cards too. If you are late on your payment for that month, don't assume that late fee. $25, $20, these things add up. $25 a month in a year, that's $500. That $500 is grocery money for a family. That $500 is, you know, tuition, money for books, sorry, money for books for a kid for one semester.
And
So
that's true.
negotiate on these things. You're late on your credit cards, call them. I'm sorry, I missed the date. Can you do? Sometimes they do like a one-time offer, or if you're a good customer with the banks, they can help you. But at least, but have something in place and make sure it doesn't happen again. Make sure you guide against it. take advantage of that refund back. Yay.
We might
But
have to start wrapping up because
okay,
almost an hour.
I'm wrapping up now. So, but make sure that you avoid it. Don't let it happen again. Set a reminder on your phone when your bills are due, when your credit cards are due. Set a reminder a day ahead or 2 days ahead, so you're well prepared to avoid those late fees, and monitor your bank account closely. Lastly, the last tip I have is very, very crucial when it comes to your financial planning. And I think I have mentioned this in my conversation, and it is seeking professional advice. It's a very important tip here because of so many things. We have financial experts, we have financial advisors, accountants, tax experts, estate planning lawyers. But you need everyone, we all, if you're, especially if it's not your strong suit or your area of expertise, you need that guidance to help you reach your financial goals, your financial objectives. For those that have complex in their complexity in their estate, meaning you have multiple assets. You have once you have more than one asset, that is complexity in itself. You have multiple bank accounts, that is complexity. You have multiple investments, that is complexity in itself. But speak to a qualified professional to help you, to give you informed information as you make those decisions, those strategic steps. Another thing is, like I said, talking to a tax professional is very, very important. You want to make sure that you don't wait till you're filing your taxes to begin talking and understanding what you should have done to avoid you paying more taxes for that tax year. Retirement planning, talk to a retirement specialist, talk to a financial advisor. If you're into investment, you have interest in investment, but you're new to that topic, you're new to that area, um, you want to make sure that you get assistance in creating a good investment strategy that aligns with your tolerance and your objectives, your financial objectives. It is very, very important. And lastly, the last professional advice everyone should always look into is towards estate planning. According to the US law, if you have a car in your name or a property, automatically you own an estate. If you have a bank account, the same thing. You need a will, you need a trust. If you have younger ones, younger kids, minors, you need some form of guardianship paperwork in case the unforeseen happens. You have a spouse or you are, single today. Who's your power of attorney? Who's gonna help you make financial decisions in case you're incapacitated to make those decisions? Have You need a financial power of attorney. You need a health, a medical one as well. So these are good things in place that you need to consider talking to a professional to seek advice. Because if you do make that advice by yourself, it might be too late to rectify things or adjust things. But don't wait till the inevitable happens before structuring your financial plan. Like I said earlier, finances, it's a journey. So far, you're making money either as an employer, as an employer, business owner, or as an employee where you are earning a paycheck. Everyone has a financial journey. How you structure it, how you work with it, how you apply your funds determines where you find yourself now and later. So take care of your future, take care of yourself. So those are the tips I have to share on today's call today. Ms.
Thank you so much. I Before
Okay,
you go further, there are some questions here and comments. Let me
okay.
quickly read them. Juju Simpson, would you recommend creating a separate bank account with a different company for a rainy day? If so, which bank is the best? He also asked the question, how much percent should I put in my retirement every paycheck?
Okay.
If 401k or Roth IRA and retirement are all the same thing, I just want to ask this question as well. What about people that retire early, like 35? What would you say?
Okay. Um, Okay, what was the first question? I'm so sorry. What was the first question? I can't see. If you can display it on the screen, that would help. Okay, I see it. I see it in the comments. All right, good. So is 401k, Roth IRA? Okay, would you recommend creating a separate bank account with a different company for a rainy day? Yes. If so, what bank is the best? So, in terms of banking, I don't know where this person is residing, but one place you can always start with is going on bankrates.com, type in your zip code, and it will list out the banks in your area. I usually love to go with high yield savings accounts. We have quite a few that offer you good interest rates on your savings. Discover is one. Wealthfront. Few credit unions also offer high yield savings accounts as high as that I've seen, because those rates change so often. So, but go on bankrates.com, put in your zip code, and it should give you the banks in your area that can be accessible to you to enjoy the benefits. Yeah, but those are just a few recommendations. How much percent should I put in my retirement every paycheck? So it goes back to one of the tips that I shared in terms of what your goal is. So what is the amount? What is your retirement need? Um, so for me to recommend that, I need to see the numbers. The numbers don't lie in terms of your income, and what your needs are, what your goals, your expenses. What do you want that retirement fund to do for you? How do you want it to serve you when you're ready to retire? Is your goal to pay off your mortgage before you retire? And at what age do you want to retire? So there are a lot of factors that would help me give you a good answer there. Everyone's retirement dream is different. Miss Sandra, I'm sure, wants to retire, with a fat bank account or investment of over $5 million. That's her own retirement goal. Yours might be different. So, but we do
That's
need
a
to
good one. I think you might need to talk to Simpson, Juju. I think he has more questions. I will
yeah,
share details before the end of the session discussion. So the other discussion.
yeah. All right. Miss Deborah has a question here. Can you tell us if you prefer a 401k over a Roth IRA because of the taxes? So, from my own personal view, yes, the Roth IRA is a better way to go. That being said, there are other means of saving that can help you eliminate taxes and also grow your money. Both 401k and Roth IRAs are good, but another thing that you face there is they are both at a risk. They both face the market risk. So those two pension plans are in the U.S. stock S&P 500. When the market drops, you lose the value of your money, and it takes quite a number of period of time for you to recover your loss and even attain how much you put in, then start growing money. So, but going back to your question, Roth IRAs are better, and if you can do the cash value life insurance, that's even a much better tool to grow for retirement. Yep, at tax
Normally,
advantage.
it's supposed to be a 1 hour program, and I know that a lot of questions are coming up, and that's why I posted Lola's details. If you want to reach her, you can reach out via the information on the screen, or you can reach me to give you an email address so that you can send your mails or reach out to her on one-on-one consultancy so that she can further explain further some of these things she mentioned, investment vehicles to, latch on to manage your money. So I want to thank everyone. It's over 1 hour. I want to thank you for your patience. I want to thank everyone watching us wherever you're connecting from. Thank you for being on this show. I also want to thank our guest, Lola Owokoniran. Thank you so much. We might have to bring you again. Seems like you're in high demand and there's so many questions coming up. And for those who cannot reach you, they can reach me and I'll get them to you. Thank you so much and do have a blessed evening, everyone. Bye.
Bye. Thank you all for joining us tonight. This evening. Thank you.